Hello, everybody, and welcome to the Open Equine Market Commentary for the week of September 3rd. My name is Toby Gennaro from Trade with Precision, and we'll just be taking a look at what's on tap for the markets this week. And so we'll jump in and get started here with the U.S. equities, looking at some of the big cap stocks here on utilizing the futures contract, the ES. And we're releasing this on Tuesday this week since we had the U.S. Labor Day holiday on Monday, and a little different hours and much lighter trading on Monday, so we'll be back to the normal session hours on Tuesday. And so looking at some of the price action here from last week, last month, we just closed out this candle here for August. We did put in a new high, but got a very bearish candle there. At some point, we're going to get a retracement here on this monthly candle, but there's no way to predict that at this point. We've got to go down to some lower time frames to see kind of where we're at. And as you can see here on the weekly chart, we've been watching this for quite a while. We get this pullback right back into the moving averages. And as you noticed, 2 weeks ago, we got that beautiful setup candle right there amongst the 10-20 period moving average. We even got in the following week a break of the high last week. And then we got the news on Syria coming out and potential U.S. strikes. And then we got that move down, which basically invalidated that setup because it broke the low of that setup candle 2 weeks ago. So things have changed up a little bit here. There's a lot of uncertainty in the markets with Congress meeting and voting on whether the U.S. is going to deploy military action to the Middle East and those kinds of things. So we're probably going to be a little headline driven here for a while, based until they get that all worked out. So anytime there's uncertainty in the market doesn't like that, and the markets will typically go down. And so even if we have a technical setup that's very bullish, the fundamentals are going to take over, especially news based on war-type events. And so going down to the daily chart, we can see that we don't really have anything new here. We've got a little bounce off of this bottom right here, but you can see that we're definitely in a downtrend on the daily chart. We've got lower highs, lower lows. Just put in a new low last week down around that 1624, 1625 level. So we've gotten a nice move off of that based on the fact that some of that Syrian news has changed. It looks like we're not going to be getting to a decision like tomorrow, but it's more going to be like Congress doesn't meet here for another probably week to 2 weeks. So it's going to take some time to get all that worked out. And so the market may begin to trend up this week in light of that, and then the next news release based on what Congress decides for the Middle East, then you'll probably see another headline reaction based on that. But looking at some of the intermediate time frames, like moving down to the 480, we can see we have some the price action continues to trend down, but we have the indicators beginning to trend up with some of these lower lows here. We got a nice move up today, and then looking at this flat level right here, right around that 1649 level. If we can break above that, it looks like there won't be anything stopping us from getting back to that recent high of around 1664, 1665 level. So that looks very probable if we can get a break above 1449. As we move down to some of the other time frames, you can see the moving averages are beginning to turn up. On the 240-minute chart, we have the indicators are trending up as well as price is making new lows, which tells us there could potentially be a reversal here, which we basically got a nice bottoming structure here. We got a nice move off of that. We broke the high, put in a new higher high, so we might get a little pullback to retest that level, and then potentially the next move would be up around that 1665 level. So we'll have to see what happens on the markets this week. If we wanted to trade this shorter trend, we have to go down to some of the lower time frames, like the 15-minute, where we can trade that move higher, and we have all the moving averages in alignment. So you'd be looking at the 15, the 30, potentially the 60-minute time frames, and you can see we have this flat level setting up right here, basically the momentum breakout. We don't really have a whole lot of or any divergence right here. We don't really have a break above that level for a higher high. So the moving averages are trending up nicely, and they're catching up to the price, which is a very good indicator that price could potentially break this 1449 level and then potentially move higher into that 1665 level. So the indicators here are suggesting that they've gone flat, so we can very easily see that breakout. We see that same move here, those same touches on the 120-minute chart, and we don't have any type of divergence on the indicators yet. The indicators are converging with the price action, which is very good. And so things are looking pretty good here. Even on the 15 minute, we're getting some divergence here. As you can see, we're making lower highs as the price action continues to retest that level of around 1648.50. Just got a little break above there, right at 1649. So if we can get a close above that, that'd be a very bullish sign that we're going to make a move. And then based on the consolidation width of this at 1645 to 48, you can expect probably a move to at least probably 1652 would be reasonable. And then if we reached that height, then we might be looking once again at that 1665 level. So once again, things could be turning back up here this week. It just depends on what some of the headlines are going to be. But we can trade some of the shorter time frames to take advantage of that reversal pattern and then that move higher. And then knowing that we're in the buy zone on the weekly chart, we just don't have a setup candle yet on the higher time frames, and we have chart conflict in terms of all the moving averages moving in different directions. Have a downtrend on the daily chart, an uptrend on the weekly chart, uptrend on the monthly chart, downtrend on the 480. So things are a little mixed up. So we just have to trade some of the smaller time frames and look for multiple time frames in agreement, moving to either the upside or the downside. Then we can start to look for some of those trend flow setups or some of those momentum breakouts in the direction of the predominant trend. And moving over to the small cap stocks, looking at the Russell futures contract, reflecting the 2,000 small cap companies. Nothing a whole lot different here on the monthly chart other than what we looked at on the S&P 500. The weekly chart looks pretty familiar as well. Had that setup candle just the same, and then had a break of the high, then a break of the low of that candle, invalidating that setup in the buy zone on the weekly. Have a bullish candle here starting out for the week, but we still got another 4 days to see that close out. And then moving down to the daily chart, you can obviously see we just put in that slight lower low right there, but then got a pretty firm rejection off of that. But we do have basically a change in trend here, a downtrend with lower highs, lower lows, again on the daily chart, and then you can see that a little better on the 480. You can also see that that reversal pattern right there, and then pretty big rejection candle right off of this level, right around 1,009. As you recall, we're looking at that 1,000 level, see if we can get a pullback up pretty close to that, but right around 1,007 is where buyers have been starting to step in, pushing this market higher. Now we've got a pretty big bounce up around this 1025 level. So we're also getting another little flat level here on the Russell contract as well. You can see that pretty well on the 15-minute chart. Had a series of touches right in here. We've actually got a break of that and a series of closes above that, which looks pretty good. We do have some divergence on the break of that, which isn't always which isn't good. But as you go to the higher time frames, things are still converging, like on the 60-minute, on the 120-minute, and we have a couple of touches along this level with the break of that level. So it looks like we could be moving back higher, at least up into this 1030 level. And if we can get to 1030, then the next stop beyond that would be right around that 1042, 1043 level. So we don't have it's going to be pretty critical here to get a break of this 1030 level before we can move higher. And that might be something that may happen on news. Just depends on what kind of headlines come out this week. It's going to be a pretty headline-driven news week here, probably for the next week or two, if not more, based on the stuff that's going on in the Middle East. But that's kind of what the small caps look like. Not too different from the ES contract. And looking at our final asset class of the day here, looking at the pound yen, and you can see on the monthly chart here, got a nice move up here for almost basically the past year on the pound yen. We got the moving averages starting to get into alignment here. Got a little bit of a sideways consolidation here with the moving averages catching up to the price. I always like to see that, especially if there's a flat level forming in there. And we have a couple of touches right in this level, right around 154, a little above that. We just got a break of the high of that. Even got a little bit of a bullish candle in and around that buy zone as the 10 and 20 period moving average begin to converge up together again and get back into alignment. Looks like we might be moving back up to this 156 level, possibly beyond. If we come down to the daily chart, we can see that consolidation a little bit better really a sideways market here between that 147 level all the way up to that 154 level, and we just got a break of that 154 level, which means we could get almost a 6 point run from here up to past 156, almost up to probably 161 could be possible. Anytime you have a consolidation like this, you're going to get a breakout to one side or the other. That's going to be the width of the consolidation, which is pretty typical. And so it looks like we're breaking up to the top side unless we get some kind of a rejection candle of this and move back down. Looks like we could be moving back up at least to this 156 level, 157, and then possibly beyond, putting in a new high. Basically on the weekly chart, you can see the moving averages have caught up to the price, just like they're doing on the monthly chart, which is a very bullish sign. And then you can see here, nothing really new on the 480 chart. You can see we're just putting in a new high there, and nothing really on the well, on the lower time frames. You do have another flat level setting up there right around 154.9. You just have some slight divergence on the 60-minute chart, which isn't bad. Looking at the 120-minute chart, that looks really good. So the 60 and the 120 are a pretty good pairing for a momentum breakout. Moving averages all in alignment to the upside, corresponding to some of the higher time frame setups. Then we can also see a couple of touches here on the 15-minute chart, but we're starting to show up a little bit of divergence here on the 15-minute. So we might get another pullback here before we launch higher, but it looks like a break of that 154.9 level is probably in the cards for this week. So things looking reasonably bullish there with a decent momentum breakout setup going along on the pound yen. So there's the wrap up for the markets this week. We'd like to issue a little reminder of the Part 1 advanced course. If you want to learn 2 trading strategies, we're actually kicking that off tonight at 8 p.m. Eastern Time. So take a look at the OpenECry website. You can get registered for that. It's a 3-part series heading up over the next 3 weeks. If you'd like to learn 2 new trade strategies to have in your bag, we'll be teaching that. All compliments of OpenECry. All you need is an account with OEC, and you're good to go. So I'd like to thank you all for watching the OpenECry market commentary for this week, September 3rd, and we look forward to speaking to you next week on the Market Update.